break down who actually qualifies for lending, what lenders are actually looking for, how to position yourself to get approved, and how to leverage for funding without draining your personal cash. Because I'm running into everyone every day in high risk industries and things of that nature, or people who qualify and don't even have like the understanding that they do. This is why I come on here as often as possible. Okay? So if this is information that you need, if you're an entrepreneur, put some fire in the chat. All right? Most people think, and this is a huge misconception, that business funding is based on perfect credit. Not all the time. Banks are looking for three things, the three C's: credit, cash flow, or collateral. Any one of the three can get you approved for funding, the funding that you need, okay? So if your cash flow, you're bringing in at least $17,000, your credit is good, okay? Say your credit is good, you qualify, you can leverage it. Say you don't have the best credit, but you have cash flow, you can leverage it. Say you don't have the best credit and you don't really have the cash flow, but you have a piece of equipment, real estate, something with a serial number, you can get approved for funding. And most entrepreneurs have something of one of the three every time. It's not just perfect credit, guys, because you have subprime lenders that are out there that will also give you money for your business. It's not as restrictive as the primary lenders like Chase, Bank of America, and the big banks, right? Why? Because they understand business and they've carved out this niche and they have billions of dollars waiting on you, okay? So if your business is producing revenue already, you have leverage, as I mentioned, all right? So restaurant owners, you are processing money every single month, but you're still dealing with tight margins, equipment breaking down, payroll pressure. Truckers, right? I'm calling you out because these are the two highest risk industries. So you know, if you're not even in a high risk industry, we can get you money 9 times out of 10. The only way you will not get approved for funding if it's a no to all three. Do you have cash flow? Do you have collateral? Do you have credit? Do you have either one of those? That is the question you will ask yourself. If you do, we can get you funded. All right. So truckers, you're dealing with maintenance costs, fuel expense, downtime, killing your income. Guess what? You qualify. And here's the problem. You're using cash. This is a huge problem. You guys are using cash instead of leveraging funding. I was talking to a mentee yesterday. He is co-owner in a restaurant. And the funding that I got him for his business, he's using for his partner's business in a restaurant. Why? Because restaurant owners just flat out just count themselves out because the primary banks will not give you lending. You have an alternative choice, okay? So business lines of credit breakdown, right? So let's talk about business lines of credit. So a business line of credit is flexible capital that is extended to you for a term, 3 to 7 years most of the time. So you're only charged on the money that you draw down. So if you have $100,000, you only need $10,000. You're only paying interest on the $10,000 you draw down. You pay it down, and then the credit is revolved back to you. All right. So you only pay interest on what you're using at the current time. It's huge. And who qualifies for this? Business owners making at least $17,000 a month, at least 30 days in business, consistent deposits in the business in your banking account can show that. Credit isn't even considered, all right? And here's things that we don't know, and I'm just here to put you on notice, all right? So notice I didn't say credit, all right? Because approvals are driven by revenue, not just your score. Right now, what does that mean? If you fall in 2 or more of the categories of the 3 C's, that means you're opening yourself up to multiple types of lending. So if you only have cash flow, we have a pool of lenders waiting on you. If you have cash flow and credit, you have primary and subprime lending waiting on you, even if you're in a high risk industry, right? Why is this powerful for restaurant owners? It covers inventory costs, payrolls from week to week, emergency repairs without shutting down, okay? Marketing and increased traffic, all right? How many of you have had the situation something broke down in your restaurant and you had to come out of pocket immediately? There go your profit. Line of credit draw down. All right. So if this is information that makes sense to you and you're an entrepreneur, put a heart or one in the chat. All right. So here's equipment financing breakdown for entrepreneurs. All right. Oh, it's time for me to go too, guys. I'm going to hurry this up. So what qualifies as equipment for restaurants owners? Refrigerators, POS system, kitchen upgrade. For truckers, semi trucks, trailers, reefer units, right? Fleet upgrades. So basic qualifications for truckers and other business owners, at least 1 year in business. Revenue consistency, equipment that generates income. Do you have a piece of equipment that's generating income? So because it lowers, because that means we're investing in something that's going to generate an income that can pay the loan down that we're extending you. It's simple, but it's complicated at the same time. All right. So pain points, that you need to consider as an entrepreneur, and especially like truckers. And I know that you're having low income. Equipment eats at your credit as well as your income, okay? So instead of waiting until it breaks, you can finance and upgrade and increase your earning capacity right now. All right, so reach out. I'm just hopping on here every day because I'm happy to help, okay? So DM me, reach out, do whatever you need. Type the word ready and let's get funded, okay, guys? So here's why most people get denied. I want to leave you with this because people aren't clear on why you're being denied. First off, you don't fall into one of the three: cash flow, collateral, or credit. If you don't have one of those, you check no on all three. But what if you qualify for one, but you're applying to the wrong institution? So your credit isn't great, but you're applying at Bank of America. Denied. So that's something, right? You should know. So poor bank account managing, inconsistent deposits, mixing personal and business financing, not positioning your business correctly. Look credible, okay? It's not always that you don't qualify. It's that you're presenting your business, you're not presenting your business in the right way, okay? So if you're making $17,000 a month as a restaurant owner, or you've been in business as an entrepreneur in any other industry, especially trucking, right? You are already positioned to access funding. Okay, so I want you to imagine this: having capital ready to use when you need it to draw down, expanding without draining your personal income, using funding to increase revenue instead of just surviving. Okay, so if you want help with what we need, and she would do that, to qualify to get positioned correctly, stop it! Stop it! Go home! Go home! All right, and just to recap everything, reach out and I'll let you know. So reach out and let's look at your revenue, your business setup, and your approval options. Okay, do you fall into one of the three? Are you bringing in at least 17,000? Have you been at least a year in business in other industries? Do you fall into one of the three C's? Okay, credit, cash flow, or collateral. All right, so you can type the word ready to 404-448-2040. 1 second. Go home! She playing with me. She better go home. All right. So thank you for sharing in my journey, guys. It's always such a joy. I come on here every day as much as possible because I want you to know that business funding is waiting on you. Be amazing.